And I know times like this you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Jawi. Today is Sunday, 12th of November 2023. I'll be doing the weekly market review covering DXY, the US indices, and the Forex markets. So let's get started. Starting with the DXY, we're viewing the weekly chart. As you can see, DXY has been pretty much indecisive because of all of the geopolitical things that are happening around the world. So I'm currently holding no bias on DXY. There is probability of going to the upside here for these relative equal highs, as much as we have a probability to run for this small inefficiency or this small fair value gap that is residing here. So we're currently inside the, let's say, a range from this high to this low. So we'll see if price wants to run above the wick consequence or the weekly wick consequence of this premium wick, be considering the relative equal highs, or else it will be running for this this low that's going to be forming, that has been formed, and later on to this, if it was really animated to the downside, we have this fair value gap between this candle's high and this candle's low. Going to the daily chart, as you can see, we have here a bearish order block right there. It's a high probability bearish order block because we have swept the buy side liquidity here and this internal range liquidity that I've called for weeks now, and then we dropped lower. We filled this fair value gap completely, and we have formed a refined fair value gap from this candle's high to this candle's low. We have a fair value gap price on Thursday. It has wicked below and didn't close it fully, and it started trading higher. So it would be expected from me to be seeing price running for this, because uh, we've seen price trading here inside this range. So if you plot up Fibonacci from this high to this low, we're pretty much at equilibrium. So if price wants to reach lower, it has already reached a premium to accumulate more orders at premium to offset them in discount. So we'll be looking for this sell side liquid, this low, and the fair value gap, or else, as I've mentioned on the weekly chart, we can run for the relative equal highs that are right there. So that is going to be pretty much it for DXY. Going to ES, here we're viewing the continuous contract, and it is the weekly chart. As you can see, as I've called last week, I'm looking for a drawn liquidity on this buy side liquidity, and we've seen that perfectly on Friday. And actually, I was part of that move. If you want to go to my Twitter account, you see the executions of me getting that high, and I've actually called it out. I'm gonna be attaching a link to the tweet that I've called out the level before it happens. All right, so now I'm expecting we have formed a fair value gap here. Price can retrace to that fair value gap. You can see that the high of the fair value gap is influenced with this, the fair value gap of this high. So it's basically two levels at one level. So it's going to be considered as a significant level. So price can retrace now to this fair value gap. I'm expecting price to retrace and work inside this fair value gap. It can touch it as an institution order flow entry drill and continue going higher, or it can completely fill it and keep going higher. Going to the daily chart, as you can see, we formed a low here and we run for the buy side liquidity. We still have we have this fair value gap right there. Price didn't reach to it. We have also the bullish breaker. So I'm considering, or I'm expecting price to form the ICT bullish pattern number one, and I'm gonna be giving more. I'm gonna be giving more info about this shortly when we're viewing the NQ. But this is what I'm expecting. I'm expecting price to trade lower, take out the sell stops that are residing below this low, and then run up higher, running this high, or running the buy stops that are gonna be forming or engineered above the buy side liquidity here. So many of the retail are gonna be going short here, trusting that this is a resistance. And once we reach here, some people are gonna be selling, and they will have their stop loss above this high. So two liquidity pools are gonna be set above this high. It is the the people who are in short right now and the people who are gonna short after we break this low. After we break this low, the breakout artists are gonna be selling, setting their stop loss above this high, and the people who sold right there, they will have their stop loss anywhere at this area right there, so within 5 handles from this high. So once we break this low, trap two parties at this high will be running up higher, taking them out, and the smart money are gonna be the only one who are profitable at that time. So that's what I'm expecting for ES. So I'm expecting a retracement before we continue running higher. Although it can just run higher and I can be not wrong, but I could be not accurate on my anticipations. I'm still looking for high prices, but as I mentioned before the high prices, I'm looking for a retracement. So I'm expecting the Wednesday to form the low of the week. All right. So that's gonna be pretty much it for ES. Going to NQ. Here we're viewing the continuous contract of the weekly time frame. As you can see, we've swept the buy side liquidity. As I've mentioned, this is a monthly breaker low. You can go to your monthly chart. I'm not going to be showing it here, although I've showed the monthly breaker low in one of the weekly reviews in the past. So we've reached to this buy side liquidity. As I've mentioned, when we closed here, I've mentioned that we have a trend line phantom here, and I want to see price takes out these highs right there. We have reached to the first buy side liquidity right there. So now I'm expecting, as you can see, we formed the lows here, we swept the lows, and then we broke higher. We have a fair value gap, and we have a bullish breaker. Price can retrace now to this weekly fair value gap. It can walk inside of it. It can give us an institutional order flow entry drill, so we can later expect and anticipate a run towards this buy side liquidity and this buy side liquidity. So we can form the yearly high. So going to the daily chart, as you can see, it's a more of a top-down analysis. You can see that we formed a low here. So if you I'm considering now price can be running lower to take out this inside liquidity, work inside the fair value gap, bullish breaker, and then continue running up higher. Because now if you would measure from this low to this high, we would want to see price trades to discount to accumulate and trap more retail into going short, and for smart money to accumulate those shorts as longs, and so they can offset them above these highs where people can buy them from the smart money. So if you look at these highs right there, what do you see? I've shared that in the last weekly review, and I've shared that just shortly before that. We have a trend line. So these retail are gonna be connecting these lines, and they say, now since price has broke above this high and retraced, this is now support resistance third to support. So everyone and their mother have bought at these candles here, expecting that price gonna be continuing running higher for this buy side liquidity and this buy side liquidity. Although it can do that, but what I'm expecting is, if I was the market maker, what is the way to trap and to do the most amount of damage? Always ask yourself this question. How can you do the maximum amount of damage to people in the marketplace? For what I'm thinking right now, the way to make the most amount of damage and harm to retail is by trading lower, because every retail trader is going to be considering this trend line phantom as a buy, especially because it's on the higher time frame, the daily chart. So many of the retail, they don't look, or they don't prefer to look at the lower time frame because they think that's noise, and it's absolutely not noise because time is fractal, and all the time frames are fractal of each other's, and it's just a parent time frame and it's subordinate time frames. So what I'm wanting to see price is running lower, taking out this low. This will trap retail thinking that price has formed, or price is going now short. So everyone will short. They will short as a breakout artist below this low. So their long orders will be, so now they are long, now they are net long. They have their stop loss below this low. Price or the market will drop down, take out their sell stops right there below this low, and then they will think that the market is going to be going down lower. They will short it as a breakout artist, and they will set their stop loss above this high. Price will later after it drop down, accumulate more orders at this fair value gap, or maybe it can wick to this fair value gap. I would love to see price keep this fair value gap as unfilled or untapped, and it would be considered by me as a breakaway gap, as price was breaking away from this weekly fair value gap right there. So price can work inside the weekly fair value gap here. It can wick to this fair value gap because we have a bullish breaker right there. It's a more refined on a daily unicorn. It's a bullish unicorn on a daily. It's more of a refined version. And then price can running up higher after short has, or the breakout artists that shorted below this low, they will set their buy stops above this high after price has accumulated orders from here to run against them. So both parties, the longs and the shorts, have been cannibalized out of the marketplace, and the market is just going to be going up higher, reaching to this buy side liquidity and to this buy side liquidity. And potentially it can reach to the monthly breaker high. We use PD arrays for entries purposes and for targeting purposes, and they are both inversion. So we use the PD array and its inversion level. So I think that's going to be pretty much it for AQ. Going to Dow, here reviewing the continuous contract on the weekly time frame. As you can see, we've swept the buy side liquidity. So all of the objectives that I've shared about ES, NQ, and Dow, I've been calling for higher prices when we closed here, and we've seen that price has reached this buy side liquidity. Now, because we've closed above this, if you go to the last weekly review, this was weekly fair value gap. But since we closed above it, it's now a weekly inversion fair value gap. Price can treat it as support and can continuing running up higher towards this bearish order block, because we can use it as targeting purposes and for this buy side liquidity. What I'm expecting is price can walk inside this weekly fair value gap that was created as of last week's trading and where we closed. So price can wick and walk up a bit inside this weekly fair value gap, and then continuing running up higher towards this buy side liquidity. Going to the daily chart, the same thing is here. The same thing that I've mentioned in ES and NQ is implemented here. Price can break out and take out these lows, walk inside the fair value gap, because we have a sell side liquidity and we have the fair value gap here. This is more of a preferred liquidity pool for smart money to hunt. So it can hunt these liquidity pools, engineer liquidity above and below the marketplace by doing so, and then it can continue running up higher for this daily fair value gap. You can see how price reached to the weekly fair value gap, just the low of it, and then it has closed, and it has retraced and closed. So that's what I'm expecting. I'm expecting price to take out these lows, walk inside the weekly fair value gap, and then run up higher to work or to run for the higher objective. We have the relative equal highs here, and we have the daily fair value gap and the weekly fair value gap. So that's gonna be pretty much it for Dow. Going to Euro USD, also known as the fiber. Here reviewing the weekly chart. It's still indecisive, as I've mentioned, on the XY. So it all depends on what the XY is wanting to do. So that's why you need to monitor and track the XY on the intraday charts. So it's better for you to just stick to the intraday charts and just walk inside that liquidity. Don't try to expect large range days, or it's even all in, like, to not be trading the currency market or the forex because of all the geopolitical things that are happening around the world, and the BRICS nation that can cause bad or can cause harm to forex traders. So it's better to stay away from that risk, and just you could be trading the indices at the meantime. So what got to my head, what I'm expecting is price running up higher for this inversion fair value gap, and we have the wick consequent. Why? Because everything here is efficient. Price has opened, traded lower, reached to the consequent encroachment of this premium wick, and then it has retraced and closed there. So nothing here is inefficient. We have a low here, but if price wants to reach for this low, it will be reaching for the sell side liquidity. Otherwise, it will be running and taking up this high and running for the inversion fair value gap and the wick consequent encroachment. Going to the daily chart, as you can see, price has worked inside the fair value gap here, the internal range liquidity, and a bit of a bullish order block here. And we have formed, actually, if you can see, we have formed, this is the buy side liquidity. We formed a high near the buy side liquidity. So many of the retail are going to be trusting this as resistance. They will set their, or they'll be shorting and setting their stop loss or the SPY stops above this high, trusting it as resistance. So we'll be benefiting from this high that was created or formed here, because many retail are going to be trusting this as resistance, and they will be shorting, expecting price that will not be reaching for this high because it has rejected it right there, which is very wrong. So I'm expecting price to run up higher, take out these relative equal highs, because now we've formed a relative equal highs, and potentially reach for the fair value gap here and the Bitcoin's conversion. So that's what I'm expecting for EU. Going to pound USD, also known as the KVON. Here we're viewing the weekly chart. As you can see, price has reached to the weekly fair value gap, as I've mentioned on the last week review, and it's been indecisive, as I've mentioned. Going to the daily chart, you can see our price has reached to the weekly fair value gap and the implied fair value gap. You can see, and you can go to the last weekly review, and we have the buy side liquidity. So there was a lot of liquidity resting there. Price has reached there and then worked inside the internal liquidity and to the bullish order block. This is a high probability bullish order block because we have swept the sell side liquidity and we have a fair value gap inside of it. So price can be running from here. I'm expecting higher prices to reach towards this buy side liquidity here. And for the higher objectives, we have a buy side liquidity here, we have fair value gap, and we have a buy side liquidity and a fair value gap. So I think that's gonna be pretty much it for this weekly review. It is worthwhile mentioning that next week on Tuesday we have CPI on at 8:30 in the morning, New York time. So it's more advice for you to be extremely cautious about your trading and try not to be positioned before 8:30 or ahead of the news, because it can break you up very quickly. So I think that's gonna be pretty much it for this weekly review. I hope you found it insightful or helpful. Until I talk to you next time, be safe. Assalamu alaikum warahmatullahi ta'ala wabarakatuh.